Namaskar to all the viewers across the country. I am Sanjula Haldar, Deputy Director in the Directorate of Income Tax PRPNP at Mayur Bhavan, New Delhi. Welcome to another session from Samvad. As part of Samvad series, today we bring to you discussion on the topic Harmonization of Provisions Pertaining to Charitable Institutions and Trusts. For the discussion, we have with us today Shri Anurag Sahai, Principal Commissioner of Income Tax, Bengaluru. Shri Anurag Sahai belongs to the 1991 batch of the Indian Revenue Service and is presently working as Principal Commissioner of Income Tax Verification Unit, Bengaluru. Sir is an alumnus of Jawaharlal Nehru University, New Delhi and National Law School of India University, Bengaluru. Sir has also pursued public policy at the University of Washington, USA. Sir has worked within the department in Kolkata, Chennai, Mumbai and Bengaluru in various capacities, including specialized verticals of international taxation, exemptions and on deputation. Thank you, sir, for accepting our invitation for this episode of Samvad on the topic Harmonization of Provisions Pertaining to Charitable Institutions and Trusts.
Thank you very much, Sanjula. I'm very happy to be here.
So, going further, I would like to ask you, what are the relevant CBDT circulars?
Several circulars have been issued by Central Board of Direct Taxes in this regard to alleviate the problems of the taxpayers. Allow me to mention a few of them. Circular number 2 of 2020 deals with and empowers the specified authorities for condonation of delay in filing audit reports. Circular number 3 of 2020 empowers the specified authorities to condone the delay in filing Form 9A or Form 10, that is the accumulation report. Circular number 6 of 2020 allows or empowers the specified authorities to condone delay both in filing of accumulation report as well as condone the delay in filing return of income under section 139(1) of the Act. Because filing of accumulation report in Form 10 and filing of return of income under section 139(1) of the Act both are required in order to validly avail exemptions. So, if these both are delayed, then circular number 6 empowers the specified authority to condone delay with regard to the same. Again, circular number 15, 16 and 17 of 2022 empowers the Chief Commissioner or the Principal Chief Commissioner of Income Tax to undertake the condonation of delay and issue necessary relief to the taxpayers.
Thank you so much, sir. Sir, a charitable organization is likely to get contribution or donation from overseas. So, could you please elaborate if there are certain rules and procedure for the same?
That's a very good question. Here I must mention for the benefit of our viewers that all overseas contributions received for social, cultural or philanthropic purposes have to be governed under the mandate of Foreign Contribution Regulation Act 2010 or the FCRA. Any contribution which is being received by a charitable entity or say an entity is desirous of receiving foreign donations or overseas contributions or grants, they must first get registered under FCRA. So, if the entity is in receipt of regular contributions from abroad, then registration under FCRA is mandatory, or if it is a one-time grant, then prior permission of FCRA authorities under Ministry of Home Affairs is a mandatory condition. I must mention for the benefit of our viewers that violation of FCRA or receipt of overseas contribution without a valid registration under FCRA invites adverse consequences both under FCRA as well as under Income Tax Act. Because under the scheme of Income Tax Act, compliance of any other law which is material for the grant of registration is a mandatory condition for continuance of registration. So, violation of FCRA can potentially entail cancellation of registration or approval under the Income Tax Act, apart from the adverse consequences in FCRA also. Therefore, I would appeal to all the taxpayers to exercise due diligence before receiving any foreign contribution and obtain clear permission or registration under FCRA before undertaking to receive this amount within their bank accounts in India.
Thank you, sir. Sir, the donations or voluntary contributions are the main source of funding for charitable institutions. Sir, could you please elaborate if there are relevant provisions regarding donations?
A donation or a voluntary contribution, now we use these terms interchangeably, can either be a corpus donation or a non-corpus donation. Now let us understand the difference between these two kinds of donation and what it entails in terms of Income Tax Act. Corpus donation, as the name suggests, is intended towards the corpus or the long-term capital of that entity which is registered under the scheme of the Act. Now, a donation, in order to be called a corpus donation under income tax law, it has to be established that this donation was made by the donor with the express intention that this is meant for the corpus of the entity. So, the responsibility to establish that a donation is a corpus donation lies with the charitable organization, and it has to demonstrate by way of evidence, if asked so by the income tax authorities, that this was the express intention of the donor. Any donation which is not a corpus donation is a non-corpus donation. Now, in terms of its treatment under the scheme of the Act, a corpus donation is exempt from the scheme of application. In simpler word, it means that a corpus donation need not be applied towards charitable purpose during the year. Viewers will recall that I have mentioned that 85% of the amount has to be applied during the year. Now, this rule of application is not meant for corpus donations, because as the name has suggested, it is meant for the long-term growth and benefit of the charitable entity. However, non-corpus donations, whether they are from foreign sources or domestic sources, all non-corpus donations are subject to rules of application. Now, a corpus donation, once the intention is expressed and demonstrated, there are further conditions, and these conditions are: number one, that it has to be maintained specifically, identifiably by the charitable entity, and number two, it should be invested in the modes permitted under section 11(5) of the Act. So, these are the small differences between corpus and non-corpus donations and the way it is treated under the scheme of Income Tax Act.
Going further, sir, I would like to ask you, do the registered entities have any flexibility in deciding what goes into the corpus, or it depends entirely on the direction of the donor?
The short answer to your question is no, but with an exception. Let me elaborate. As you rightly mentioned, whether an amount of donation is corpus or non-corpus is entirely dependent on the express intention of the donor. However, Finance Act 2022 made one small exception to this. Now, there are certain religious institutions of national eminence or historical institutions of repute and eminence, these are notified under section 80G2 of the Act. Now, if such notified entities under section 80G2, they receive contribution, say for repair of a temple, mosque, gurudwara or a church which is notified, then at the option of the charitable entity, these amounts can be taken into the corpus. So, there is one exception made, but with this exercise or option there are certain conditionalities attached. Number one is that the amount which is taken into the corpus for repairs of temple, mosque, church or gurudwara etc., they have to be used only for that purpose and no other purpose. Number two, this amount cannot be donated further to any other entity, but has to be spent on that specified purpose only. Number three, that this amount has to be kept separately identifiable. And number four, this amount has to be invested in modes specified under section 11(5) of the Act. So, this is the only exception. Otherwise, when it comes to whether a donation is corpus or non-corpus, it is entirely on the will of the donor.
Sir, you have referred to the modes of investment several times. Can you please explain what are these modes?
As I have mentioned earlier, the modes of investment are permitted under the law as per section 11(5) of the Act. Now, viewers will appreciate that public charitable institutions are recipients of public funds and they have to spend for public purposes. So, the law has taken care that these amounts which have been received by charitable entities and that their incomes are exempt on that, they are kept in risk-free modes, and law has ensured that these investments have to be not put in speculative or risk prone investments. So, generally as a thumb rule, viewers will appreciate that any investment in land, building, fixed deposits, shares of public sector companies etc. are permitted along with certain notified mutual funds. However, speculative investments such as derivatives or bitcoins or futures and options or shares of private corporations etc., they are not permissible. So, viewers may note that before planning their any financial decision, they must ensure that their scheme of planning is into the permitted modes, because if the investment is in non-permissible modes, again it invites adverse consequences.
So, what happens if a charitable institution receives voluntary contribution in a non specified mode, for instance, equity shares of private corporations?
Good question. While there is no bar in receiving a contribution in non-specified mode, but the law entails that this investment received in non-specified mode is converted into a permitted mode under section 11(5) of the Act within 1 year. So, ultimately the investment has to be kept by a charitable entity in a permissible mode under section 11(5) of the Act.
So, what are the consequences of non investment in specified modes under the Act?
As per the provisions of newly introduced section 115 BBI introduced by Finance Act 2022, any investment which is not in modes permitted under section 11(5) of the Act is deemed to be specified income of the taxpayer. Now, this specified income is taxable at a flat rate of 30% without allowing any deductions. Hence, again I would strongly urge on the taxpayers and charitable entities listening to this that please ensure that all your investments are in the modes specified under Section 11(5) of the Act.
Thank you, sir. Sir, could you please explain whether an entity can receive anonymous donations and whether these anonymous donations are exempt or taxable?
It's a very good question. Anonymous donation, as the name suggests, is a donation where the identity of the donor is not ascertainable. Now, the taxability of anonymous donation is governed under the provisions of Section 115 BBC of the Act. Broadly speaking, as a thumb rule, all anonymous donations received by entities registered or approved for charitable purposes are taxable. And all donations which are anonymous and received by entities approved for public religious purposes are non-taxable. So, this is the broad distinction. However, as I have mentioned earlier, there may be entities with hybrid mode having both charitable as well as religious purposes. What happens if such an entity receives anonymous donations? Now, in such a case, if that anonymous donation is received with a direction that this is intended towards, say, a hospital or an educational institution run by that entity, that is towards the charitable purpose, then that becomes taxable. The taxability under Section 115 BBC is at a flat rate of 30% and it is applicable on a higher of amount of either 5% of the donations of the entity or rupees 1 lakh. So, these are the broad provisions governing taxability of anonymous donations under Income Tax Act.
Thank you, sir. So, for the benefit of our viewers, could you please explain whether a charitable organization registered under the Act can receive cash donations and whether there are any restrictions under provisions of the Act?
See, a charitable or a religious entity registered or approved in the first or the second regime, they can receive donations in cash. But here I would like to mention two significant restrictions. Number one, as I just mentioned in my last answer, if the cash donation is anonymous in nature and it is made to a charitable entity, then it invites taxation as per the provisions of Section 115 BBC of the Act. Number two, and more significantly from the point of view of the donors, desirous of availing deduction under Section 80G of the Act. Now, if any donation is made in excess of rupees 2000 and in cash, then as per the existing provisions, the deduction under Section 80G will not be available. So, under both these scenarios, it is always preferable that voluntary contributions are made in non-cash mode.
Thank you so much, sir, for patiently explaining all the provisions related to charitable institutions and trusts. We hope this session gave you the necessary insights on what are the various do's and don'ts that charitable institutions have to adhere to for the continuance of exemptions under the Income Tax Act 1961 and what happens if a charitable institution receives voluntary contribution in a non-specified mode. Please join us for the next session of Samvad to know more about what are the significant changes proposed in the Finance Bill 2023 in relation to the provisions relating to charitable institutions. With this, we come to the end of today's session on harmonization of provisions related to charitable institutions and trusts. I thank you all for joining us for this episode. Do follow us on our social media handles on Facebook, Instagram, LinkedIn, YouTube, and Twitter, and keep watching for updates on more educational and informative content. Until the next time from Samvad, thank you and Jai Hind.